Good morning, Sense of Things audience. It's Jeff and Ron here once again for another episode of the Sense of Things podcast. And on today's show, we're going to really focus on a lot of what's been going on with the economy here and the stock market over the last few days, really. We had 3 really bad down days, and we've had a bit of a recovery. So what we're going to do is over the next couple of episodes, we're going to be breaking down bits and pieces of what some of the causes of this were and what we see moving forward. So stay tuned to the Sense of Things. All right, folks, welcome to the Sense of Things. Ron, how are you doing today?
Good morning, Jeff. Doing well. Getting into the heart of August. I can't believe it. The school buses are out. They already started school here.
Wow. Okay, we're next week. So yeah, they've got one more week of enjoyment. Although we went from our nice placid summer to 100-degree plus days here for this next week or so.
Yeah, your humidity, forget it. I can't handle.
Yeah, it was. Yeah, I walked outside this morning and I needed to take a shower. Just walking to the mailbox.
You could keep that. I'll visit you in November.
There we go. Yeah, it'll be down to the 90s by then, so you'll be good.
Hear you.
I know you've got some stuff for this episode, so why don't you walk through that a little bit?
Yeah. All right. So for those of you that know me, they know that I am a big movie guy. I could tell you the year movies were made, who was in it, lines from the movie, like I know a lot of other movie geeks are too. And I thought it was interesting because I'm starting to feel my age. I just flipped another trip around the sun last Monday. And God, we're going to explore 84. And then when we do our 2-part series on recession indicators, we're going to go to 94. So these were the top movies in 1984. And I think people are going to be a little amazed about how many great movies were 1984. And almost any of these movies you could turn on no matter where it is and know what's going on, know the line, and watch it for 15, 20 minutes. And that's when you know it's a good, not just a good movie, but a classic movie.
A great
and I have some honorable mentions, but I'm just curious, which one or two stands out the most to you?
Oh, I would say out of I really probably the last 3 are my favorite movies of that year. I love Romancing the Stone. I just think it's hilarious and a very classic movie with those guys and a lot of the bit part cast with Danny DeVito and all those guys. I think was just exceptional. I still want to have a little mule. The Bronco that was in there, I think it was a Bronco.
That was El Guapo's Jeep.
El Guapo's, yes, El Guapo's Bronco, the little mule. I still want to have a little mule. Beverly Hills Cop, I just think is an absolute classic, and one of the few that the remake was actually as good as the second one. The third one kind of sucked. But
by the way, the fourth one just came out on Netflix. I haven't watched it yet.
I don't. Eddie's trying to relive his past because I think he did another Coming to America. I just can't. I can't do it. I'm sorry. I love the original too much to have them ruin it with another one. And then, of course, Terminator. That's what started the franchise. And I pretty much every Arnold Schwarzenegger movie until he started doing or whatever the movie is, the rejects or the has-beens or whatever that movie is now with Stallone and him and all that. I've loved every Schwarzenegger movie ever, even the bad ones.
I got a good segue there for you. So I heard an interview with Judge Reinhold on the Rich Eisen show. I don't know how long ago it was, that he was cast for Beverly Hills Cop. The Beverly Hills Cop was supposed to be for Sylvester Stallone to star in because he was the biggest star in the early mid 80s. And this was supposed to be an action movie. And as they were going through it and Stallone was signed up for it, basically they felt that they convinced Stallone that maybe this isn't a good vehicle for you because there's not a lot of action, and ended up doing Cobra, which was a pretty bad movie.
Which was a horrible movie. Yeah.
Yeah. And then they brought in Eddie Murphy, and then Eddie Murphy not just did an unbelievable job, but they also rewrote the script to add all the humor because the original Beverly Hills was not like fun, dark humor. It
Yeah.
was just supposed to be all action.
Yeah.
I thought that
Which,
was a great little.
which it would have
Well,
just
40
been,
years later, you find this out.
it would have just been Cobra in Chicago instead of,
And then here are some honorable mentions. Splash, not bad.
Splash.
Police Academy. Can I tell
Oh
you?
my
I
God.
watched that again about 3-4 months ago. Holy crap. I totally forgot about how hysterical. Purple Rain, even though it wasn't a great movie, the soundtrack is classic.
The movie was terrible. The soundtrack, absolutely amazing. I think Prince at the top of his, that was probably the pinnacle for me of Prince. Absolutely. Movie, awful. Besides the little part where he has the little puppet that I think is just absolutely hilarious in the whole movie. But
all these were 1984.
1984. Wow. Yeah,
And
and I thought Splash actually was a lot earlier than that. I thought that was early.
No, and actually, you know what? It's a good movie. Not a great movie. It's
No.
a good movie.
Nope. It's a feel-good movie, and it's also got John Candy, who's my all-time favorite star of that generation. I just think the world of it. He was just such a funny dude and so many amazing movies just in a row.
Absolutely. All right. Let's
I
get
love
into
it.
some business here. So we always show the CNN business indexes, and this is as of August 2nd. So this is as of Friday before the big drop. And we were already at extreme fear levels with the VIX. And I just thought this was interesting because the top chart is the timeline, but we show that we're basically at the extreme fear level.
Mhm.
And look where we were a year ago. We were in extreme greed.
Yeah.
And if you remember a year ago, we were already about 3 weeks into a 10% slide down to the end of August. So market momentum showing fear. But here's the interesting thing. The NYSE stock strength, 52 high weeks and lows, is showing extreme greed.
Hmm.
So you get this bifurcation of what's going on as far as overall sentiment. And
Yeah.
then we get the safe haven trade. I thought this was interesting. This is probably my favorite out of all of them.
Mhm.
Bond demand is up because people want the yield because they know
Yeah.
interest rates are going to
Rates
go
are going
down.
down. Yep.
And the safe haven trade is an extreme fear. And the bond market is always ahead of the stock market and well ahead of the economy. What are your thoughts?
Oh, absolutely. Yeah, I'm not falling for this little trick the market's pulling this last couple days. Theoretically, I come from the Investors Business Daily, where I was trained on a lot of this stuff, and leading into tomorrow could be what's called a follow through day, which is a day where you have when the market gets pummeled down, then you have a positive day and finally a positive day, and that can indicate a new return or new trend up. I honestly think will most likely be, and this is Tuesday the 7th or Wednesday the 7th of August. I think we're probably going to see a down day again tomorrow, and then I'll break that follow through, and then we're just going to keep muddling around here because we've got some things that you and I have been talking about, especially on the hiring side of things and the employment side. That's been the thing really buoying the market, and we saw some really ugly numbers last Friday on that.
And I know you're going to cover that in the next podcast.
Yeah, unbelievably ugly. That's that last little piece of the pie.
I thought this was a good chart. I grabbed it off of Yahoo Finance. The AI is basically propped up the market over the last 12 months plus or whatever. And while pretty much everything else has basically been flat or up a couple of points, definitely low mid single digits. And you could just see like this could be turning, not because AI isn't going to be a thing, not because there aren't quality companies in AI. There was just a tremendous amount of air in that balloon, and certainly coming back down to reality. And you need a flush out before you could go back up.
Yeah. And we'll have a little bit of a conversation in the next episode about the yen carry trade. And I personally think that when we talk about that, I think there was some of that in some of these infrastructure stocks, the net infrastructure stocks and things like that, and the Magnificent Seven. where the carry trade typically is you sell or you borrow yen and you buy currency. I think some of that was people plowing money into some of these
Okay.
Magnificent Seven stocks. And then as that unwound, it just pulled those things down quick. And I don't think that's over yet.
I don't think so either. I thought this was interesting because a lot of people say, oh, the market always does better under Democrats or it
Yep.
always does better under Republicans. In the end, I thought this was a great chart
Mm,
because you always talk about with people consistent contributions, reinvestment of dividends over a long period of time. And yeah, there are some presidencies where it's up, it's down, or whatever. But here you go. This will debunk it for the last 63 or 62 years, right? Just stay invested.
mhm.
That's it.
Yeah.
Stay invested. You'll do okay. Don't pull your money out or reduce anything
Well,
because
just,
of one
don't,
administration or
yeah.
the other.
Don't make the assumption that all of a sudden, if we have a Democrat in, oh my God, they're going to just regulate and they're going to do all this stuff. Businesses will figure it out. They always do. They're going to figure out ways to make money. Sometimes it's a little easier, sometimes it's harder. If we have less regulation, it tends to be a little easier, but that doesn't mean that companies won't do stupid things during that time period either.
Totally not. There's always ebbs and flows. The
Yep.
way I always understood it was the Republicans basically reduce regulation, reduce taxes,
Mhm.
basically light a fire under the rocket ship, and then
Yep.
it burns out at the end of their administration. The Democrats basically clean it up, right? More money flows in, and the market flies above where the Republicans were. And if you
Mm,
take a look at the ebbs and flows over the last 50 or 60 years that I've seen it, that's what's happened. Obviously, 08, 09, you saw what happened with COVID, you saw what happened a little bit with the dot com, right? But then things faltered in the 08 and 09. So
mm,
I thought this was interesting. And one of my last charts here I thought was pretty interesting. Do stocks outperform treasuries? And the answer is no. Okay.
mm,
But obviously, during certain times, and we've had an unusual circumstance here in the last 2 years where
mhm.
obviously treasuries did not outperform stocks, but treasuries were a great place to hang out when you were earning 4 to 4.5 to 5.5%.
Yeah, it's interesting. I've got some clients that we actually had been doing that. All right, let's be in money markets and things like that. And what I ended up doing with some of these folks, okay, we started buying what you and I had been talking about. We started taking some of that money market money and putting it into like short-term treasuries in a ladder. And thank God we did that.
And actually, we got a small window of opportunity here in the next 30, 45 days that if you got pre-retirees or retirees, they could lock in for 6 months or so, a little bit over a 5% rate on the treasuries.
Yeah,
Because once they start lowering rates, those 1 to 6 month T-bills are going to come down
that's
on.
going to come unglued. Yeah, and that's I can share real quick. When we're done with your stuff, I can share the yield curve just to show people where it's at again.
Yeah, no,
Um,
that's a good idea. All right. So I got this from my friends at First Trust in their recent monthly newsletter. And I love this because I'm an amateur market historian. I love going back. I love seeing psychology, ebbs and flows and cycles. And here it is. I love this about with different administrations, whether they have all three
mhm,
branches, two, one, whatever it may be. And I just thought this was incredibly interesting of performance. We're not going to have a chance to go through all this, obviously. But what it comes down to, and I've heard this a long time ago, when we have a split Congress,
mhm.
the market does better because nothing gets done.
Yeah,
As sad as it is to admit that, it's the truth,
yeah,
right? Because if
yep,
you have all, if one party has all three, they feel like they could probably railroad things through and just overrun. And then you know what? Sometimes a lot of their things are for the bad, and people realize that. And then the midterm elections happen and things flip.
mm,
I don't know in my not in my lifetime. I don't think there's ever been a time over a 4 year period where one administration had all three parts for all 4 years. They
yeah,
may get
typically
it
not.
initially, but
Yeah,
it's something always flips
yep.
at the midterm for whatever reason.
Yeah. And the Senate has basically been split right down the middle for, God, it's as long back now as I can remember. The House has flipped around, but the Senate's okay. Yes, it's gone from Democrat to Republican, but it's like by 1 seat or 2 seats or something like that. So it's not anything massive when it comes to the Senate. And the House has moved around quite a bit over time. And I think the House has, I think, a little bit more effect on the things that are the things that affect the economy more. The House tends to have a little bit more effect on. I think Senate typically is more of your it's more of your appointments and who's getting appointed to different roles and things along those lines. So they have some effect, but they don't have as much of an effect, I believe, as the House does, because they're generally the ones that start kicking things off.
But I just thought I'd point out three very quick things here in the chart.
Mm,
So this is on the bottom half here. It's talking about how well the market does the first year of the presidency. Now, only 2001,
mm,
which was just a complete flush out
yep.
of the .com, that nothing did
Well,
well.
and September 11th too.
September 11th, yeah, but that was at the end of the year. You're right,
Yep.
because that was, yeah. But I thought this was interesting. Look at how well consumer discretionary did consistently across the last 30 years.
Yeah.
Also, information technology. Other than 2001, 2005, you were getting better than a 25% growth
Mm,
first year of all the presidencies.
yeah.
Those are two things to look at when we're troughing out here before the election, where to put money over the next 18 months.
Yeah, and I think it's coming into this a little bit different this time because we've ambled our way through 4 years of a lot of inflation, everything else, and does that now have are we really seeing the cracks? Like I said, last Friday we had we had employment that was just meager at best. And if you dig into it, it was a lot of government employment and things like that. So it's not a really good sign for the average worker in this country. And literally in the last 6 months, unemployment rates have gone from 3.5 to 4.3. So that's a big move. And although historically it is very low, that's a big move from where we've been at.
And still a high percentage of the hiring is government,
Yeah.
which I don't even look at that. That's just bunk.
Yeah, it is. And is it there now it's just okay. It didn't really make as big of a deal when we had like 300,000 jobs being created. Okay, 50,000 of those were government employment. Okay, great. Now, when it's down to 114 and 50,000 jobs of that are government, that's not a good sign for what's
Oh,
going on. And those are jobs that really don't produce anything in our economy. They're jobs that are there and sometimes needed, but they don't actually produce
it's
anything.
not part of our productivity. No.
Yep. Absolutely not.
So my last slide, you know what? I think I'm going to probably show this once a quarter. I think
Okay.
the last time I
Yeah.
showed this was January, showing the year end, somewhere in that time frame. But
Mm,
what I've done here, and I've always looked at this, you look at the bottom four performing sectors of the
mhm.
year before,
Yep.
and then you can see how well they've done the following year.
Mhm,
And I'm a big healthcare person, and this is where money will
mhm.
start flowing before
Yep.
the election.
It already has this.
But also, the healthcare is also a political football. We got to reduce drug prices, things sink. We got
Mhm,
to reduce this. It's a political football. But I think going into next year, healthcare should really take off as one of the top sectors. But I
mhm,
just thought this was interesting. People could freeze the podcast and really check this out, because I think what you're going to find is there's going to be some real opportunities here, no matter who's elected, to be invested through the end of the year and
mhm.
into next year, pending no geopolitical event.
Yeah. You figure you're going to see probably real estate go up just from the borrowing cost perspective. Utilities will typically go up in this
Yep.
time period when rates are going down. There's a whole bunch of that. Let me quickly, before we jump off of this, I just wanted to,
Yeah,
because
yeah. Show your yield
you've
curve.
shared this before, and I want you guys to see this a little
No,
bit.
that's
Yeah.
a great service. I love that.
Yeah, US Treasury yieldcurve.com is one of my favorites because you can see how it is over time. And this is as of today. Actually, it's interesting. Treasuries are hanging up there. If you look at Money market yields now, they were up in this 5.4 range for quite a while. And money market yield rates are now like down around 4.9 and stuff like that. So they've come down while the treasuries have held up there. But what Ron was talking about before and what y'all need to understand is this ain't normal. It's, this is not the way this usually works. And we'll go back to what would be normal. So we'll go back a few years and it should be here. Shoot, that was even worse. Yeah, we've been in a inverted yield curve for so long, you can't go back far enough to show what a normal yield curve. This is what a normal yield curve looks like. Rates are really low on the short
Well,
end.
except
Now,
for the bend at the end. So you got to
yeah,
go back another
abnormally
month and a half.
low.
That's all right.
But this is the way they normally look. Up, going out 3 years, 5 years, 10 years, and out to 30 years. Now, this was weird where 20 was higher than 30. But you look at today and it's a whole different animal. It's exactly reversed.
And it
And
stayed that way for quite some time.
yeah, it's stayed this way forever at this point. And what's going to happen, and I think what a lot of people don't realize is we've got these abnormally high short-term rates. That's going to change fast. This top end of it is going to come down quickly as they lower interest rates. And a lot of this is not set by the Fed, it's set by the market, and the market will just start pulling those rates back.
10
You're
years going to be
to
the
see
most important out of all of them, but
yeah, you're going to see this whole short end of the market out to a year really come down fast. And you probably aren't going to see a major change in the long-term rates. They're going to just hang in there and stay where they're at, with that 20-year just staying where it's at there. So, those are the things you need to be thinking about as you prepare for what's going on. The short-term rates, the rates are going to come down fast. The prices aren't necessarily going to come up that quick because the durations are just so short. You better be prepared for that. If you've had a lot of your portfolio sitting in that shorter end of the yield curve, maybe you make sure that you lock in some of these rates by buying treasuries, laddered treasuries or something like that, so you can keep those rates as long as you possibly can.
absolutely. Absolutely. Yeah, there's a window of opportunity here, no doubt about it.
Yeah.
For people to lock it in and conserve some money here while geopolitical temperature is heating up and everything else. So
Yeah,
we're going to cover
absolutely.
more of this, and I know I'm of our podcast coming up.
Absolutely. So, folks, thanks a lot. We're trying to keep these as short as we possibly can and deliver more of them to you in these shorter formats. So, hopefully, you're enjoying this. Let us know. Give us an upvote if these are working for you. Give us some comments. Let us know some things that you would like us to cover, and we'll be glad to do that. And make sure you subscribe to the channel wherever you're watching or listening to it.